All right, welcome. Sorry for that delay. I just had a couple of connectivity issues on my end. Why don't we get started? Welcome to Sidebar. I'm Judge Dan Winslow, formerly of the Massachusetts Trial Court, now of the New England Legal Foundation. And we've got a really interesting show here today with a fascinating guest. And before I introduce her and the topic, I just want to go over a few preliminary matters. If you're not familiar with the app, it's intended to be an interactive conversation with my guest and me, of course, but also with you. And if you'd like to join us on stage or ask a question, feel free to press that little equal button at the lower left-hand side of your screen, and we'll call you up onto the stage and in turn have you have your piece, ask your question, then we'll nicely kick you off the stage to make room for other people. And then if you'd like to react, on the right-hand side, if you have an Apple device, you'll see an emoji button, and you can actually click on the emoji button, send us a range of reaction from happy to sad to disgusted to anything in between, and we'll be able to get that. And you can actually send us a text at that point as well if you're just too shy to join us on stage. This is a legal show. We like to talk about interesting topics at the intersection of business and law, but it's not legal advice. And so if you need legal advice, by all means, please refer to competent counsel of your own choosing. But we're just having a conversation. And along those lines, the opinions expressed today aren't necessarily the opinions of the New England Legal Foundation or either of our respective employers, but there simply are. It's simply our personal views expressed in the course of the moment. So with those caveats, of course, as a lawyer, we always have to throw in a lot of caveats at the beginning. I wanted to introduce our guest today. Deb Gordon is the co-director of the Alliance of Professional Health Advocates, which I want to have her talk about in a bit. And she's also a former health insurance executive. She's the author of a book called The Healthcare Consumers Manifesto, How to Get the Most for Your Money. And she's a contributor to Forbes.com. Deb's an Aspen Institute Health Innovators Fellow, and she's also an Eisenhower Fellow. She got her BA in bioethics from Brown University and an MBA with distinction from the Harvard Business School. And Deb, welcome to Sidebar. We are thrilled to have you here.
Thank you so much. Thanks for having me.
So I guess my first question is, how did you get interested in this field? It's turned out to be a pretty cutting edge field, but back when you were making decisions in bioethics at Brown and at the Harvard Business School, maybe not so much. What drew you to this field?
I planned it this way. I knew what was going to happen. Just kidding. I've always followed my interests opportunistically. And when I was at the Harvard Business School, I was quite an oddball. There was no interest in healthcare whatsoever, in my opinion. But I write about this in my book. I grew up as the child of entrepreneurs, and we didn't always have health insurance. And I was just really aware that the sort of line between have and have not, or well and not well was very thin. And I became very interested in the financial vulnerability that people feel when they get sick or when they don't have resources for health insurance. And it just stuck with me. Nothing bad ever happened. I never went without, but that sense that it could be me who's unlucky, it could be me who has misfortune, just stayed with me and gave me, I think, empathy for the millions of people who struggle with their healthcare.
Struggle is actually a very apt description, because I was reading one of your articles on Forbes.com. We're all familiar with the crushing burden of student loan debt and the repressing economic impact of that huge debt load. But at least with schools, you can plan for budgeting. With healthcare, you can't always plan to budget. You can't always, count on staying well, and some things just happen. And I was shocked to learn in your article, your recent Forbes article, that about half of all Americans have medical debt, and that if you added it all up, including, the credit card debt, because people will pay their medical bills with credit card debt and the like, that Americans are carrying about $1 trillion, a trillion with a T, $1 trillion of medical debt in our economy. What an incredible drag. I would think that would be not just on the economy, but on individual households.
Well, let me intercept there. So actually, the $1 trillion is what we pay out of pocket as individuals in the healthcare system. So about a third of healthcare spending, not quite a third, comes out of pocket or comes from consumers. And then Kaiser just published an analysis, Kaiser Family Foundation or Kaiser Health News, that suggests that $100 million of medical debt is outstanding. So,
No
however
kidding.
you,
I was off by a
however,
few zeros.
but the point is, you're correct that we are responsible for $1 trillion of medical spending each year as individual Americans, individuals and households.
And $100 million of debt, though, people are carrying at any given moment for typically unbudgeted debt. You can't plan for this stuff. It's just you have to dig deep.
That's right. And there are instruments. I was going to say there's no 529 account for healthcare, but there are health savings accounts. There are financial instruments, but they're not that, I don't think people really understand them and people don't really use them optimally. And the reality is most Americans don't have savings. So, I've seen a range of figures, but most people don't have $1,000 saved that they could use for an emergency or an unplanned health expenditure. So where would we save the money from? On average, most Americans don't have it.
So one of the things that sort of stuck out in my mind as I was reading your articles, Deb, was I thought this was all solved with the ACA or so-called Obamacare, where if you like your doctor, you can keep your doctor, and all those other promises that were made to Americans. I thought we solved this problem with not having lack of coverage, et cetera. And I'm just curious, is that clearly you're nodding your head, so problem's still outstanding. Like, what did we accomplish?
Yeah, it's so funny that you say this because actually, when I was in Australia for my Eisenhower Fellowship, I went to Australia for about a month to study their system. And every meeting I had with a hospital leader, a health insurance leader, a public official, they would look at me and they would say, I was interviewing them, but they would always turn it around and say, so Obamacare, what's the big fuss about? It doesn't even solve your whole problem. And I was like, yeah, no, it definitely doesn't. And it actually wasn't intended to. It was actually as big a deal as it was. It was sort of a modest improvement. But what I will say is that the ACA has done tremendous good. So if you have adult children who get to stay on your health insurance, if you have a pre-existing condition but can still get health insurance, if you're a woman and you don't pay a penalty in terms of a higher health insurance premium, you can thank the Affordable Care Act. Those are all consumer protections and features of the ACA. The other thing it did, speaking of financial vulnerability, it expanded coverage to millions of people. So between the Medicaid expansion, which didn't happen everywhere, but happened in most states, and there's a lot of data. Kaiser Family Foundation has a wealth of data about the benefits of expanding Medicaid in terms of individual health and financial well-being as well. So between the Medicaid expansion and the marketplace, the health insurance marketplaces, healthcare.gov and state-based marketplaces, a lot of people got coverage. Not everyone, 20 million people or so got coverage. That's a lot of people. We still have a bunch of folks who are uncovered. And costs, it wasn't really a cost reducing strategy or policy. It just wasn't designed to reduce healthcare costs. I wish it had been, but that wasn't really the point.
So it is more of a let's get people on medical coverage so they're not uninsured, and then at least try to improve health, if not financial well-being. Let's at least prove physical well-being and mental well-being. So your area of focus in your healthcare consumers manifesto is how to get the most for your money. And before we dive into that, I just want to welcome and thank Joanne and Frankie for joining us. Frankie, always good to see you. Mark and Chantel, thanks for joining us as well. You're all welcome, by the way, as we get into this conversation, to let us know you'd like to join us on on stage and ask your question of Deb, or make your point, or share your experience as well. We'd welcome that kind of input from you and the audience. But so Deb, as a consumer, how can we actually reduce the cost of healthcare? I have some other ideas of my own as a layperson, but you're the expert. How can we reduce the cost of healthcare?
Yeah, I mean, I guess first, is your question what we as individuals can do, or what do I think policymakers or regulators should do?
Well, let's take it systemically first and then drill down to the individual sort of nuts and bolts piece. Systemically, on a sort of a macro view, you'd mentioned earlier that the ACA wasn't designed to, reduce the cost of healthcare. You wish it were. So what's the unfinished business systemically? From a policy standpoint, what's the unfinished work that needs to be done to make the healthcare system writ large less expensive?
Yeah, and there is not, I'm not going to pretend that there's an easy answer. So, for example, one thing that happens elsewhere, which I don't think would work here, but it is a way to reduce costs, is governments set rates. Governments set either minimum, sort of maximum reimbursements, or literally the government pays for healthcare. We have some elements of that. So Medicare rates are certainly very influential in the market, but typically a commercial health insurer will pay a hospital or a doctor, a clinic or whomever, a percent of Medicare, as in an inflated rate. So 100% plus the Medicare rate. And so we have almost the opposite of what other countries do. We have sort of the floor and not the ceiling. And so, but rate setting would be extremely unpopular. We're capitalists. We're free market. I use air quotes, free marketers. We're not really in this market, but we wouldn't really appreciate that rate setting kind of mechanism. I think there is, there's data, there's sort of classic economic analyses about the amount of waste and fraud in the healthcare system, and it's vast. But ultimately, it's just an inefficient system. So we think we're free marketers, and we're going to infuse a profit motive into the system, and that's going to inspire or motivate actors, businesses or institutions to find innovative solutions and all that. And that works, I think, on the scientific advancement side. We really do benefit from a entrepreneurial innovation ecosystem, but on the financing side, it's really just not real. So
I want to invite Joanne onto the stage. Joanne actually wants to speak to that point, sort of the capitalistic system. And so, Joanne, welcome first of all to Sidebar, and let's have your points, your question.
Okay, well, I don't really have a question because I have been a small business owner. I own 2 small businesses, and it has been actually, I'm blessed, but we have spent up to over $23,000 a year in health insurance. And because we're a small business and because we're under 10 people, the cost is astronomical. And the benefits are a little bit better, but not much. So your health insurance companies are not offering stuff. There are people that are on Obamacare. I'm here in New York, so I'm in Manhattan, that area. So
that's a very low rent district, right?
And it also is a very high corporation. Northwell has taken over, as incredibly so. I have a very close friend who's an internist, and because of this system is looking so forward to retire. My uncle, who is 88 years old, was a pediatric cardiologist. And he left Kaiser really at the age of 50, became an ER doctor, then retired at 55 because he was told to move along his patients. He was a pediatric cardiologist. And his whole point of going to Kaiser, now we're talking the 50s and the 60s, was to really help people, not be bothered with the whole business of having an office. I mean, I don't know what the answer is. I look to you guys. I look to you, Deb, as what is the answer? Because we are a capitalist society. We are do I want to say owned? Big Pharma has a big point in this. And it's like, what do you do? It's just incredible. And the fraud is incredible. So I'm looking to you. What is the answer? I mean, I'm blessed enough, and there are vehicles out there, life insurance policies now, where you can get what is it called? Because I have it, but I got it many, many years ago, where you can get that long-term health care, and it's part of the insurance policy, so that when you're doing those savings, see, we're not taught to save. I of course say, save your money and invest wisely. I don't care if you're saving a nickel a week. Mm-hmm. And it's for your health. Because, I also say when you're 60, you're going to want to party like you're 20. And if you don't have the money, what are you going to do? Yeah. And you have to have it for your health care.
Yeah. Hey, Joanne, thank you. I want to turn it over to Deb now from a small business owner. But thank you very much, Joanne. That's a great point. And let's speak to that, Deb. Let's drill into the small businesses and what they can do to reduce. $23,000 for a small business is a crushing burden. Yeah. And what's crazy about it, and I know Joanne probably has this experience, you can't control from one year to the next what the percentage of growth is going to be. I've seen 40% spikes from year to year on healthcare insurance for companies. How do you budget for that? It's impossible.
Yeah, no, it's crazy. I think that in general, what I was going to say is that the money we spend on healthcare is specifically on insurance for a company of any size, but especially small businesses. These are a function of the negotiated rates between hospitals and other healthcare providers and the insurers, and then layer on the benefit design. So how much do you pay in deductibles versus premiums and co-payments? And it's, it all goes into an actuarial model and outspits a rate, which includes, needs to include the health insurer's margin. So I just want to say that in Switzerland, health insurance, the core health insurance product must be offered by nonprofit insurers. You can't make a profit in that system on the core benefits. And if you think about a margin on a health insurer being, when I worked in a Medicaid health plan, a nonprofit Medicaid health plan, we ran our administrative expenses at 6% of premium. That's incredibly low, almost too low in a way. Very, very difficult, but we were super lean. Commercial, for-profit, a public company offering health insurance, it might be 12%. And that would be, I think, considered pretty good. So, I'm a capitalist too, so I don't want to say we need to regulate profit margins or anything, but the capitalist answer to that is market pressure. And so I would say the same for consumers, but even more so for small businesses and certainly larger businesses, that you feel powerless. You probably feel powerless. You get the rate, it's 20%, it's 30, 40% higher than last year. Why, all this stuff. Ask the questions and shop around. So your options may not be great, but at least push for, I think that in the health insurance industry, inertia is the industry's best friend. It's a real pain to switch benefits. Employees don't like it. You don't like it. It costs you money and time and aggravation. And it doesn't automatically save you money or save you money for very long. So you might save money this year, but have to look again next year. It's a pain. But the only way to influence rates is going to be with market pressure. So if you're the decision maker, Joanne, you have a lot of power. You may not feel like you have power, and it may not work to use that power, but if you keep pounding and you get your colleagues, your small business association, your industry association in it with you, you can apply pressure to the insurers, and the insurers then need to apply pressure to providers. Now, it may be, you may have to give up certain things, to get that better rate, and that's kind of a crappy equation.
So there's two analogies that I was going to ask you about, Debbie. One, and don't quote me on the numbers, but for procedures that are popular that are not covered, and LASIK surgery is a great example, at least because I don't think it's still covered. But way back when it was first invented, it's great. I've had it. You wouldn't know by these, but I can see 20/20 from a distance. And when it first came out, not covered, cost like $5,000 an eye, some crazy number. And because it's not covered, the healthcare providers saw how profitable it was. And now you get like LASIK surgery, like for $500 an eye. But the price came down because of competitive market pressures. And I guess my question is, we know that competitive market pressures work because when it's not covered, the prices come down. So when things are covered, how do we get to harness those competitive market pressures to reduce the costs of procedures?
Yeah, it's a good question. I mean, I think that's the idea behind consumer cost sharing, that if you put some portion of the financial burden onto individuals, we, the individuals, will pause, will reflect, will kind of take our money and shop around and try to get the best deal. That's not really what happens. In actuality, people with cost sharing just avoid care and altogether, because most people, there's data on this also that shows that people fear being unable to afford their healthcare. So all the media attention on healthcare costs has worked. It's gotten people really afraid of going bankrupt or getting whacked with outrageous bill. And so what happens a lot of times is people just don't get the care. So it's not quite working. I think, to your question though, how could we kind of use that? I mean, my book is, the whole concept is, what if we took that financial vulnerability and instead of hiding from it, sort of used it as purchasing power and actually demanded transparency, which is starting to come about, and demanded value more than just knowing what the price is, which is, I think, should be table stakes. Actually ask, why is it that much? And I just had an experience. I've been super lucky. I'm knocking on something. I haven't had to use my health insurance very much, but my family's been using an out-of-network healthcare provider, and I'm the insurance person. So I'm like, okay, I got to see what can we get reimbursed for these out-of-pocket expenses. And I submit the claim. I fill out the form. First, the check goes to the provider, which is incorrect. So I have to call to get the check to come to my house. And I ask them, like, oh, by the way, what's this based on? What is the rate based on that you're reimbursing me for? Because of course they're paying a lot less than we paid. And the poor frontline rep, they're like, we don't know. What are you asking? Why are you asking this question? I'm like, oh, I used to work for one of you guys. But I tell you that in my questioning, I got, maybe it's not material for everyone, but I got something like $100 more in the check. They had to recut the check, and they said, oh, actually, we looked at your claim and it should have been priced at this instead of that. And the net was about $100 to me. And I'm like, I'll take it. I know I'd rather use that money than let it, linger in the health insurance bottom line. So it's just a very small example, but the more educated you as an individual, or you as a business owner, decision maker can be, the more you can ask a smart question, a genuine question, just what is the basis for the reimbursement you're giving me? I didn't say, why is it so low? I didn't even say, why is it so low? I said, what is it based on? And that in itself was like a negotiation. Like when you go to a flea market or a yard sale and you say, like, how much is this? Or you're looking at something and they offer you a better price than is marked. Sometimes just asking the question will shake loose a little bit of value. I can't remember the question you asked me, Dan, but I think the point I was trying to make is behavior.
That's helpful. It's just talking about the competitive, harnessing those market forces that work so well in the uninsured space for the insured space. The other analogy, and so this is sort of a repeating theme on this show, because we at the New England Legal Foundation advocate for limited government based on rule of law. And, so oftentimes we see well-intentioned governmental efforts which actually they don't solve, they actually create massive social problems, like the cost of housing. You can trace back to a lot of governmental decisions and zoning and regulations and a whole bunch of other things that just drive up artificially the cost of a house. And I've seen that as well with healthcare. And the analogy that I've used is pizza. If you order a plain cheese pizza, it's not going to cost as much as a pizza with 42 toppings. If you want a 42 topping pizza, go nuts, but you could and you would expect to pay more for a 42 topping pizza than you would for plain cheese. But when it comes to healthcare, what if you only need plain cheese? What if you only want plain cheese? What if you only could afford a plain cheese pizza worth of healthcare? And government mandates require 42 toppings of mandated coverage, which you may or may not ever need. And I'm just curious, we've seen the same thing with cable television too. You can only, one of our companies that is a member of our organization is Liberty Mutual Insurance Company. And Liberty, their advertising campaign is only pay for what you need, which I love, by the way. I love that concept. Just pay for what you need. Why can't we only pay for what we need with healthcare? Why do we have government mandates that drive up the cost of healthcare and make it unattainable, unaffordable for so many people who just want a plain cheese pizza?
Yeah, that's fair. It's a good analogy. I think that if you look at, so the ACA created 10 essential health benefits, and they're pretty basic. It's like access to, well, we've always had access to emergency care, but access to behavioral health care, mental health care, preventive services, maternity care. So I think that where that argument leads, Dan, is a couple things. One is that people without financial resources will opt for a cheese pizza even if they need protein or vegetables, like to be well. And so I think part of the issue is that if you can only afford cheese, but you need, I don't know who needs pepperoni in your analogy, but let's just say you need broccoli or mushrooms or something. You need the nutrients. You're going to forgo the nutrients you need because of cost. And there's a fairness principle in those 10 essential health benefits. I also want to remind folks, like, where your argument leads, a lot of men don't want to have to pay for maternity care, for example, or prenatal care. And I'm like, there is always a man involved, one way or another. There's always a man involved. And so the issues of, the sort of gender specific care, especially when it comes to prenatal or maternity care, that's just not fair. Women shouldn't have to. Our bodies pay the price. Why do our wallets have to? So I think there are a few caveats that I would not support cheese only in your pizza analogy. But I think in once you cover some sort of basic fairness principles, I'm all in on the order what you need and pay for what you need. And there is a concept which is defined contribution, which is how we do our retirement accounts. We put in money, our employer puts in a match, and we get to decide within reason where to invest those funds. And the same concept holds in health insurance. There are companies that will give their employees X dollars for that should cover a core set of benefits, and then say, go to the market and see. You pick for yourself. And if you want a low cost plan with fewer benefits, you get that. And if you want to pay more, you pay more. And in concept, I really support that. And I think, the insurance market hasn't really risen to the challenge of making that viable or attractive to more employers. But I would like to see that happen. So I know you have.
Yeah, it's interesting because actually Joanne sent us a text comment, and I'll just read it for you. Joanne, as you've asked not to come up on the stage, I'll read the comment, but feel free to text me again, and if you'd like to come back up. So, on that plain cheese pizza analogy in the 1970s, and we see this with liability insurance. You can have primary insurance, and then you have umbrella insurance for catastrophic loss. The idea is like, why don't we split health insurance? You have the basic plain cheese pizza, and I agree with you, by the way, on gender specific issues. We should, that's part of what I would consider to be part of a plain cheese pizza. But what I've seen is that a lot of times on government mandates, it's not a function so much of medical decisions, but by simply political pressure. So if you have, a group that applies political pressure to the legislature, to Congress to get, have something added, it gets added. It's not really driven by medical or healthcare decisions, but it's just added as politics. So that's my point of concern. But in primary and umbrella insurance, you'd have the plain cheese pizza, and then you'd have like the catastrophic healthcare coverage. Joanne points out in the 1970s, this market-driven sort of system that we used to have in the 70s, that her little business did have catastrophic coverage, so they could keep sort of the basic stuff down, and then that, very rare, but just in case, that catastrophic coverage. And is that not as much of a product these days? Is catastrophic coverage just sort of not part of the ACA?
That's right. Catastrophic coverage. There is officially a catastrophic plan design, but it's only certain people are eligible for it. So only basically young, healthy people are eligible for it. So that, again, it does come from a government or protectiveness of vulnerable people, that if you're middle-aged or older and you have a chronic condition, a catastrophic plan will leave you very financially vulnerable, almost certain to have a financial outcome that's not good. And so the government sort of requirement is that only people who would be likely not to need that much, who would actually do well on a catastrophic plan, can get it. So it is a protectiveness. You could say it's paternalistic. The fact is that I would almost always argue against a catastrophic plan because it's bad coverage. It typically is bad coverage. And if you qualify for subsidies on the marketplace, which many, many people do, not everyone realizes they do, you're going to get better coverage for less cost, actually. So I personally I would say, like, why would you ever get a catastrophic plan? I would say do that in a gap or in a pinch. But actually better would be now, especially their subsidies on the marketplace have gotten more generous, at least temporarily.
Yeah. So, and Joanne, I'll be right with you on just one moment. So what I'd like to do is, I'd like to pivot in the last moments. We have about 10 minutes left in the show, believe it or not. Time flies when you're having fun. But I want to talk about what consumers at an individual level can do, Deb, that you feel. And I think we'll kick this off with Joanne's points in just a minute here, because from the small business owner perspective, I think that's helpful guidance. But from her question, and then just generally, what can small businesses, what can individual healthcare consumers do? So let's just have Joanne come up. Joanne, you're back up on the stage. Thanks for joining us.
Oh, goodness. Deb, I love
I've never heard of people from Manhattan being so forward before, Joanne.
Oh, never, right? I'm your typical New Yorker, born and raised. So, and I'm a senior citizen, and I guess so I've been and seen it all. See, here's the interesting thing with the catastrophic, but again, we've changed. And how long ago was the 1970s? 50 years ago? We had it. I actually was I worked in a law firm at the time, and I was the one that got us our health insurance. We had none. So I was like, I want us to get health insurance. But in those days, you didn't have the same tests that cost so much money. Mm-hmm. You would walk into the doctor's office for $40, which is what is now your copay. So technology has changed it. There's been so many changes. So, I mean, I get it. And then being the small business owner of two companies, looking to see how can I cover our staff and give it to them as a thing, it's so different. Like even the health saving plans, that's what I think they're called, HSAs or whatever, are really difficult to get if you are a small business. But I like your idea, Deb, in terms of you got to rally. And that's the problem of today. We're all, oh, woe is me, and whine, but we don't do anything about it.
Well, whining serves a purpose, though, Joanne, because at least it's raises the issue. But hey, Deb, let's pivot off of that and go right to some specific ideas that you have from your healthcare manifesto and other suggestions for consumers.
Yeah. So first off, I absolutely agree. I think whining is the first step. Now turn it into action, turn it into questions, turn it into educating yourself. So when I tell folks what I do, what I work on, people outside of healthcare, literally I've had people say, I heard you say healthcare and then I stopped listening. So
Yeah.
it's boring, it's scary, it's ick, nobody wants to deal with it. But there's data that shows that people who don't understand health insurance concepts spend more money than they need to. So the cost of ignorance or the cost of confusion is material. And you as an individual, you as a business owner can educate yourself and understand even just the basic terminology, the basic principles of health insurance. It's not that hard. I don't have a PhD. I'm not a genius, and I understand it, and so it just takes a little investment of time to get it. Once you get it, you understand that there are just some very clear trade-offs. And if you're this kind of person, you might want to make these kind of trade-offs. If you're that kind of person, you want to have a different set of trade-offs. Those things might be your health status, the kind of doctor you need. Do you have a chronic condition? Are you at high risk for something? Or are you super risk tolerant? Or do you have a bunch of money saved up? So if you can tolerate it, you're most likely, most people, again, there's data to back this up, most people save money on a high deductible plan. And that really is the concept of putting more of the financial burden, more of the financial responsibility, up to you, the individual. So first off is sort of just invest a little bit in Tiny. That's Tiny. She wants to be part of it.
Tiny, she wants attention. The dogs are weighing in. We're going to be talking about veterinary medicine in a future show.
Well, Tiny will be a welcome guest, I'm sure. She's allowed to say. So educate yourself, because it will directly or indirectly lead you to make better decisions. And you will probably be able to find either savings or the best fit for you. The second thing I would say is ask the question. So I'm married to a doctor, and whenever someone in my family needs healthcare, I'm like, can you deal with it? You went to medical school. But then he'll say like, oh, we need to spend whatever, $500 or this much or that much. And I'm like, is it negotiable? And my husband, not a negotiator, it's like, no, it's not negotiable. It's not. But really, he just doesn't want to negotiate, right? Fair enough. That's a type. I'm willing to negotiate. I'm not embarrassed about asking a question. I encourage people who care about their healthcare spending to develop a thick skin and just normalize asking the question. Is there a better way to do this? Do I need to spend this much money? Why is it priced this way? Literally, I got $100. I wasn't even trying. I just wanted to understand. I mean, I was sort of trying, but I was like, it's fine. Whatever it is, it's fine. But can you explain the basis for the pricing? And I got the $100 off. So normalize asking the questions of your doctor, of your health insurance, of whatever healthcare provider, billing office, what have you, that you're interacting with. And then finally, and I think really sort of trumps everything else, is if you approach your healthcare life as if the money you're spending is your own, because it is, you will start to internalize, all of the above, what I just said, and care about the decisions in a different way. It doesn't automatically lead to lower costs, but if 300 million of us, or however many adults we have in the US, started asking these questions, what does it cost and why? Is there an alternative? I guarantee that is the kind of market pressure that doctors, hospitals, clinics, innovators, drug companies, and health insurance plans would have to acknowledge. It will not bring down the cost of innovation, but it will, I think, inspire a more market responsive approach to healthcare costs.
That's interesting. That's thank you, Deb, for that point. And Joanne, thanks for that commentary as well. I really appreciate having your perspective as a small business owner. And Lisa, thank you for joining us. Nice to see you again. So I guess where do we go from here, Deb? Is there any organized effort in the United States? Is it very sporadic? Are there any people that are sort of taking up the cudgel of driving healthcare costs down? I know I was Mitt Romney's chief legal counsel when he was governor, and the Obamacare was supposedly modeled on what we had Romney Care in Massachusetts. I do know in the early days of inquiring about whether we should have some sort of healthcare reform that the recognition was people don't don't have regular doctors, so they go to an emergency room, the most expensive care, to get treated for very elementary things that they could go to their doctor for if they only had a doctor, if they only had coverage. So there was at least that aspect of cost savings, in the at least the initial motivation behind healthcare reform. But I'm just curious, where do we go from here? These are all interesting topics. Clearly, half of Americans carrying debt, so it's clearly a pain that's felt by many, many pockets. Where do we go from here?
Yeah, I wish I had a magic wand and could just sort of fix it, but I think that, but I don't. What I think we need to really do is, and let me say by we, I mean the whole of the healthcare industry. For everyone from your doctor's office to your health plan to the drug company and et cetera, is like, this is clearly my bias, but I do believe that if we could design healthcare around individual needs and preferences, we would lower costs. So, for example, does anyone want to go to the doctors anymore if it can be done on your phone? So telehealth, it's still the doctor's time. It's still a high value service, right? And you can't do everything remotely, but my gosh, I do not ever want to go and pay for parking in downtown Boston if I don't have to, right? Or I don't want to leave my house if in 20 minutes I could be on and off a visit with my healthcare provider. So things like that will ultimately reduce administrative expense and are clearly aligned for the consumer. So that's one thing. Like, how are we designing the actual services we're delivering? That's one. The other is invest in the technologies. So a lot of medical technologies raise costs, right? Because we have to create the incentives for companies to discover new things, and we all benefit when they do, or we should all benefit when they do. But there are also technologies that will lower costs. So there's a lot of things happening. AI, I know, is a buzzword, but if you really think about what AI can do, a computer algorithm can do a better job determining who needs treatment, who's going to benefit. And we can save, when we talk about waste, a lot of waste in the system is repeated tests or trial and error. And insurers actually require trial and error. It's called step therapy. If you want this drug that's expensive, many insurers will require you first to try this one and fail, and this one and fail, and this one and fail. Meanwhile, they do well if you don't fail on this treatment. But if you do fail, you've paid for it, they've paid for it, and time and suffering has ensued. So what if we could jump right to the right treatment for the right folks? That's the kind of thing technology can actually advance. And so I would really love to see investments, and there are clearly investments in that kind of innovation. So innovations can raise prices, innovation can also save money and create efficiency. So that's one.
Well,
and then finally,
go
ahead. We're out.
No, I just gonna, we are only down to one minute or so, but there are this group called, patient advocates, which, are the folks that sit there and make sure you get your right treatment and stuff. And, family members will play that role oftentimes, but, somebody to do it. And you're the co-director of the Alliance of Professional Health Advocates. And I'm inferring from that a lot of the things you're talking about, which is somebody to make the call, to push back for that $100 or whatever, that's actually something that you and your colleagues do. And it's kind of cool. It's a new niche. It's like, who's going to stand up for the little guy against, the behemoths in the process? And that's what you do. Just tell us, just in a minute, tell us about it and how people can use it.
Yeah, so it's a professional class of people whose job is to do what I just described I did for my family. So they'll call, just as you said, they'll intervene, they'll represent the patient or the consumer's interests purely without any conflict of interest, no institutional incentive. And so professional independent advocates are trained. There is a certification, so you can find board certified patient advocates who are trained and qualified to advocate for you and or your company in terms of the care you get, the care you need, the insurance you're using, the medical bills you've received. So the gamut from cost and coverage to care itself. And unless you're an insider or you have a lot of time on your hands and infinite patience. Fighting for yourself in the healthcare system is very difficult. You need an insider, and that's what health advocates are.
That's great. Well, thank you for that succinct description of what the professional health advocates is, Deb. And before we wrap up the show, I do want to just, and Stephen, nice to see you again. I do want to just invite folks to join us on next week's Sidebar episode. We have an expert in DEI, that's diversity, equity, and inclusion, and she'll be talking about the why of DEI and why it's become such a hot topic and why that topic matters. So tune in next Thursday, 12 noon Eastern, for that episode of Sidebar. And for today, I just want to thank our guest, Deb Gordon, for joining us and to share, sharing your expertise, your experience, your tips on how to get $100 just by asking a simple question. Really insightful discussion, Deb, and thank you so much. It was great having you on. That's going to wrap up this edition of Sidebar for this week. I am Judge Dan Winslow. Do justice. Thanks all.